According to a report on CNBC, Binance employees and support volunteers are telling people how to bypass the crypto ban in China. The report says customers in China and other countries are able to subvert Binance's controls to hide their country of residence, according to messages in Binance's official Chinese language chat rooms. Financial regulation experts have expressed concerns that the exchange's KYC and AML efforts can be so easily bypassed. Surprise, surprise. Anna, I'm going to pass it off to you. What did you make of this story this morning?
First of all, I wonder if many people were surprised by that report. I mean, that has never been kind of exposed and said outright. But I think if you talk to crypto users, they wouldn't be surprised that it's that it was pretty easy to register on Binance, even from the jurisdictions that are not supposed to be there. But I also, I kind of also always feel ambivalent on such topics. Like, yes, these people who, might or might not be Binance employees and probably were the Binance angels were explaining how to circumvent the Chinese crypto ban. But then, is it like, if we think in the terms of the larger, kind of morals, is it a bad thing to circumvent some countries' crypto ban? Like, why is crypto banned in China? Like, on the bigger picture, like, did something really bad happen? Like, those people were trading crypto from China. Well, why not? What do you think, Zach?
Yeah, I mean, I think it's a good point to zoom out a little bit beyond sort of the irregularities that may be highlighted in this report with how a company such as Binance operates. I think the bigger picture is fair, and I think it's something that CoinDesk has long, wrestled with. Like, is KYC right? Is KYC appropriate? Does KYC lock people out of financial products that they should otherwise have access to? Is it a fair burden for people to have to overcome? And I think those are the big questions that cryptocurrency as a technology presents and makes you sort of think through. And it's something that I think people in the space, Anna, you kind of alluded to this, are accustomed to thinking through. I always think of Emily Parker, our colleague here at CoinDesk, who's done a lot of reporting in the East Asian markets. And she's always sort of quick to point out that this Chinese crypto ban was never really a ban. If there was a will, there was a way. And there was a ton of crypto trading going on in China despite this ban. So I think, the realistic view is that these are products that people in China and all around the world are going to want to use. The Chinese situation, many people have pointed out, is largely to prevent capital flight, which is something that Chinese authorities are very significantly concerned about. So the fact that this ban is in place has always been a bit porous. And I think, this report kind of highlights some of the mechanisms by which people have worked around that ban. And I don't think that the reality of this ban being somewhat porous is going to change anytime soon, despite efforts by the Chinese authorities to continue their crackdown. So it is interesting to get a little bit of the detail here. It's hard to, entirely, sort of arbitrate the claims that are put forth against Binance in this piece, but it is a fascinating glimpse at what people are doing in these countries where crypto is ostensibly banned, at least. Jen, what do you think?
Yeah, I agree with both of you. There's a quote in the story by Duke University professor. He said, "I think explicitly about the national security implications of how terrorists, criminals, money launderers, cyber people in North Korea, Russian oligarchs, etc. could use this to get access to this infrastructure." I think it's really interesting that this professor kind of points out, terrorists. We hear that a lot. All these bad people in these countries like Russia, North Korea. I think there's more good people who need access to financial systems, to financial products, to just carry on with their day-to-day than there are bad people. So to read that quote was a little disheartening with the story. I think, though, some of the claims in the story are pretty blasting. If I don't know if that's the word I should use, but they were saying that Binance employees were encouraging people to falsify documents, falsify addresses, falsify bank statements to show that they live in other jurisdictions. Given Binance's relationship with regulators, I don't think that the information in this report is going to be used in a good way against them. And so in that way, I think that it's pretty damning. Anna?
And then I think, that the problem of crypto KYC is not unique to Binance. Like, we reported that there is the whole market of fake accounts, really viable working fake accounts on any exchange, like including the U.S. exchanges like Coinbase. This story is kind of unique because the people who have something to do with Binance were caught instructing people how to do that. But it doesn't mean that people don't know all these tricks even without those instructions and haven't been using them all across the globe on any exchanges.
Yeah, it's worth pointing out, like, the Binance comment in this article, right? It's like, hey, these are like employees that we're not, we're taking action against these employees who may have violated our internal policies. So this is something that I think Binance is appearing to take seriously, at least, rather than suggesting that it's standard operating procedure. It is interesting to watch. And Jen, I think you're right to sort of highlight this in the context of Binance's fraught relationship with many regulators worldwide, especially in the US, especially as Binance assumes that top position as other of its peers, cough, cough, FTX, crumble to the ground.